Have you ever stopped to think about what actually happens to your cash when it sits in a bank account? You might feel safe knowing your money is secure, but here's the hard truth. Your cash is quietly losing value every single day. That $10,000 you worked hard to save. Because of inflation and near zero interest rates, in reality, it's worth less now than it was a year ago. And this is a problem millions of people don't realize until it's too late. You see, banks are paying you almost nothing to keep your money there, sometimes as low as 0.01% interest, which is nowhere near the inflation rate. Inflation means prices of everyday things like groceries, gas, rent, and utilities are going up. So while your cash stays the same, the cost of living is climbing. Imagine this: if inflation is at 5% and your savings account is paying 0.01%, you're effectively losing 4.99% of your money's purchasing power every year. That's money disappearing from your wallet silently, invisibly. But here's the real kicker. This isn't just about losing money slowly. Keeping your savings in cash also means you're missing out on opportunities to grow your wealth and protect your hard-earned money from economic uncertainties. So what's the alternative? Where should your money go if not the bank? In this video, I'm going to share 6 different assets that are safer and smarter than keeping your cash idle in a bank account. These aren't just random investments, these are time-tested strategies that protect your money from inflation, grow your wealth, and offer more security. Whether you're someone who's just starting to save, or you've been stacking cash for years, this video will open your eyes to better options. And don't worry, I'll break down each asset simply, explain why it's safe, and how you can start investing with confidence, even if you're a beginner. So if you want to stop losing money to inflation, beat the banks at their own game, and build financial security for the future, make sure you watch this entire video. Also, don't forget to hit that like button, subscribe to the channel, and ring the bell icon so you never miss a money-saving tip. Now, let's get started by understanding why cash is actually losing value, and why it's riskier than you think. Now that we know cash sitting in the bank isn't safe from losing value, let's dive deeper into why cash is actually losing its purchasing power. The biggest culprit: inflation. Inflation means that prices for goods and services go up over time. When inflation rises, each dollar you hold buys less than before. To put it simply, imagine last year you bought a basket of groceries for $100. This year, due to inflation, that same basket might cost $105 or even more. Your money didn't grow, but prices did. So even if your savings account balance stays the same, what you can actually buy with that money is shrinking. This is a silent tax on your savings. Over the past few years, inflation in many countries, especially the US, has been higher than usual. While it peaked in 2022, inflation is still above the historical average, meaning your cash's value is continuously declining. And to make matters worse, banks are paying you almost no interest. The interest rates on most savings accounts and checking accounts haven't kept up with inflation. Sometimes they're just a fraction of a percent. This means your money is not just stagnant, it's effectively shrinking in value. For example, if inflation is at 5%, but your savings account pays 0.05%, you're losing nearly 5% of your money's value every year. After adjusting for interest, this gap between inflation and interest rates is why keeping large amounts of cash in the bank long-term isn't a safe financial strategy. That's why millions are turning to better alternatives that protect their savings, grow their wealth, and keep up with or beat inflation. In the next part of this video, I'll share the first 3 of 6 smart and safe assets you can consider instead of letting your cash lose value. Stay tuned, your money's future depends on this. Now that we understand why cash loses value in the bank, let's talk about smarter places to put your money. I'm going to start with 3 assets that are safe, reliable, and offer better returns than cash sitting in your bank account. These options help protect your money from inflation and can even help it grow. First up, high-yield savings accounts and Treasury Bills. Unlike traditional savings accounts, high-yield savings accounts offer interest rates several times higher, sometimes between 4% and 5%. They're backed by banks and the FDIC, so your money is safe up to $250,000. Treasury Bills, or T-bills, are short-term government debt securities. They're backed by the full faith and credit of the U.S. government, making them one of the safest investments you can make. Plus, they often yield better interest than a typical savings account. Next, precious metals, gold and silver. Gold and silver have been stores of value for thousands of years. When the economy is uncertain or inflation rises, these metals tend to hold their value or even increase. They're a tangible asset you can buy physically or invest in through funds and ETFs. This makes them a great hedge against inflation and currency devaluation. And third, I-bonds. I-bonds are savings bonds issued by the U.S. Treasury that pay interest based on a fixed rate plus an inflation rate that adjusts every 6 months. This means your investment keeps pace with inflation, protecting your purchasing power. I-bonds are a low-risk, inflation-protected asset that you can purchase online. with a $10,000 annual purchase limit per person. These three assets offer safety and growth far better than letting your cash sit idle in a low-interest bank account. In the next scene, I'll cover 3 more assets that can help you build wealth over the long term, including real estate, stocks, and even cryptocurrency. Keep watching, because the best way to protect and grow your money isn't by keeping it in the bank. Welcome back. Now that we've covered the safer, more liquid options to protect your money, it's time to explore 3 additional assets that have the potential to build long-term wealth, but with a bit more risk and reward. Let's start with real estate. Real estate is a powerful way to build wealth over time. Whether it's owning rental properties that generate monthly income, buying land that appreciates, or investing in real estate investment trusts, REITs, this asset class offers both cash flow and potential price appreciation. Plus, real estate often acts as a hedge against inflation because property values and rents tend to rise when the cost of living goes up. Just be aware there are costs like maintenance, property taxes, and sometimes vacancies to consider. Next, we have stocks and index funds. Investing in the stock market has historically provided some of the highest returns over the long term. Index funds, which track the performance of major markets like the S&P 500, offer a diversified and relatively low-cost way to grow your money. While stocks can be volatile in the short term, staying invested over years or decades can help your portfolio grow significantly more than cash or bonds. This makes stocks essential for building wealth, especially for retirement savings. Finally, let's talk about cryptocurrency. Cryptocurrency like Bitcoin and Ethereum is a newer and more volatile asset class. While it carries higher risk, many investors use it as a hedge against traditional financial systems and fiat currency inflation. It's important to approach crypto with caution. Invest only what you can afford to lose, and do thorough research before diving in. For some, cryptocurrency is a small part of a diversified portfolio, not the entire strategy. These 3 assets, real estate, stocks, and crypto, come with varying levels of risk, but offer significant potential rewards and diversification benefits. Remember, diversification is key to managing risk while growing your wealth. In the final scene, I'll give you a clear action plan on how to start moving your cash into these better assets safely and confidently. Stay tuned. We've covered a lot today: why keeping cash in the bank isn't as safe as it seems, and 6 assets that offer better protection and growth for your money. Now, it's time to put all this knowledge into action. Here's a simple step-by-step plan to help you start moving your money into smarter, safer assets. 1. Evaluate your cash reserves. First, determine how much cash you need to keep easily accessible for emergencies, usually 3 to 6 months of living expenses. This money should stay in a regular or high-yield savings account. 2. Start small. Diversify. Don't put all your savings into one asset. Spread your investments across several of the safer options we discussed, like Treasury Bills, I-bonds, or precious metals for safety, and stocks or real estate for growth. 3. Educate yourself. Before investing, take time to learn about each asset. Use trusted sources, watch tutorials, or talk to financial advisors. The more you know, the better decisions you'll make. 4. Use dollar-cost averaging, rather than investing a large sum all at once. Spread your purchases over time to reduce risk and benefit from market fluctuations. 5. Stay consistent. Building wealth is a marathon, not a sprint. Commit to regularly investing and reviewing your portfolio. Small, consistent moves add up over time. Remember, the goal isn't to avoid risk completely, it's to manage risk wisely while protecting and growing your money better than just sitting on cash. Also, share your thoughts below. Which asset are you most interested in? Or, if you have questions, drop them in the comments. I'm here to help you take control of your financial future. Thanks for watching, and here's to making your money work smarter, not harder.